In the last session we started looking at the subject of trend lines and how by just adding a few lines to a chart it helps to gain some perspective about what the market sentiment is and the direction that the price is moving in. In this session I want to expand on that subject a little bit. I want to explain some of the observations that I've been able to make about how price moves around trend lines. And I think if we understand how price moves around trend lines, it will give us some advantage and an opportunity to be able to take well risk defined trades. I usually start these sessions on a chart, but this session is going to be confined to the blackboard, and I want to consider 3, maybe 4 scenarios which occur around trend line, and then later on in coming sessions we can start looking at the charts and we can start looking at practical demonstration or application of these principles or observations. So if I go ahead and draw my trend line as such, the first situation I want to discuss is the trend line holding and what I expect to see if a trend line is going to hold. Whenever I draw a trend line, regardless of whether it's an upper trend line or a lower trend line, I automatically assume that the trend line will hold. I never make the assumption that the trend line will breach. The reason for that is very simple. The trend line is called that for a reason. It's the line that holds the trend, and I would rather be with the trend than against it. So a trend line break is not something that you assume. Rather, if a trend line is going to be breached, you let that happen, and we'll look a little bit later on in the session about how we can take advantage of the trend line break. So in the first scenario, what we'll witness is that the price approaches the trend line, and if that trend line is going to hold, although I've made the assumption that it will, it doesn't mean that I'm taking an aggressive entry. Rather, what I'm going to be looking for is consolidation at or near that trend line, and if I see that consolidation taking place, then I will get into a trade short on the grounds that the line will hold. And really seeing that consolidation is something which is essential. It's never wise to take aggressive entry at a trend line. Rather, you always need some form of confirmation. That consolidation could be several bars across. It could form a star pattern, inverse head and shoulders. Regardless, it doesn't matter what that pattern is, but you need to see consolidation. You need to see that line is holding for some time, and that's what gives confidence to enter into the trade. Sometimes you'll witness that price, it approaches the trend line, it breaches it, and it consolidates the other side of that trend line. Again, when you see this happening, depending on what happens next, there are several opportunities that will take place that could allow us and give us some good, well risk defined entries. I won't be taking a trend line break on this entry, and my trading style isn't aggressive. It's a very conservative trading style, but the first scenario which you'll witness as a follow through from this is actually that the price will break back under the trend line. Usually you'll get a retest of the trend line, and this time it will act as resistance, and you'll have a resumption of the downtrend that line suggests. So as far as trend line holding is concerned, these are the 2 most common scenarios that you will see. In the first instance, we're seeing a consolidation below the trend line. The longer that consolidation takes place for, the more the more comfort that we have that this trend line is going to hold, and that is what allows us to take an entry in that situation. In the second situation, we'll see that the price approaches the trend line is breached, you have a consolidation above that trend line, the price breaks back below it, and we're able to take a trade when the price comes to retest that trend line, and from there we tend to get a trend resumption. Now, one of the things which I wanted to add about trading one of these two scenarios, it doesn't matter which one it is that in both cases what gets us in is not what gets us in is the trend line. And when I'm trading either scenario, usually what will happen is I'll have an emergency stop, maybe 40 or 50 pips the other side of the trend line. I'm saying 40-50 pips, it depends on the time frame that trend line is appearing on as well, but if we're talking about some of the longer time frames, maybe on an hourly, on a 4 hourly, 40-50 pip stop loss. And it's not necessary that if you used an emergency hard stop that that you would allow for that stop to be hit if in fact the trade wasn't proven worthy of your efforts. So the logic that got me into the trade is that this trend line is going to hold. So if I see after this that the trend line is being breached, and in this case the price moves back up and over the trend line, then I'll be happy to quit that trade there and then, because the logic that got me into the trade was that the line would hold. Clearly the line has been breached, is not holding, and so I need to cut my losses short on that trade and call it a day. And it's an important principle which I apply. The logic which got me into the trade is the logic which will get me out. Okay, so these are the first two scenarios. I want to move on and look at the trend line break and what it looks like. The trend line break has a number of different shapes and faces about it, and I'm going to describe some of the most common. The first scenario that you'll witness is a clear trend line break where the price has a momentum break through that trend line. It will usually arch back in order to retest it, and then you will have a continuation of that momentum move. Sometimes if you have a sharp high for this, you'll see the price arching or hooking back towards the trend line, and there's a difference in the way that I trade a trend line break as opposed to the trend line holding. The trend line holding is not an aggressive trade. It's something where I have to wait for confirmation to make sure that that trend line is going to hold, whereas the trend line break, especially if it demonstrated momentum, can be an aggressive trade, which means that I will take an entry immediately on the retest of the trend line in this first scenario where we see the price hooking. Second scenario that you will see is trend line break, and in this scenario the market sentiment isn't exactly clear. What will happen is that the price will zigzag over and well, above and under the trend line, and when you see that happening, the best thing to do in that scenario is wait. What you really want to see is for a momentum break away from the trend line. It doesn't matter if that goes 50 pips, 100 pips, 150 pips. The fact that the price moved away from the trend line tells you something about the significance of the line, and when the price comes back to do a retest, then that will allow us to take an aggressive entry on that trend line, and usually we should be able to target toward the high at least again, with a very well defined risk. Now, just as I mentioned in these two scenarios where the trend line is able to hold the price, and that the logic is that it is the trend line, it's the trend line that gets us into the trade, and so it's going to be the trend line that gets us out regardless of the hard stop that we place. And that is something which is equally true for the trend line break as it is for the trend line to hold. One of the other observations that we're able to make about a trend line break is that often if a price if the price is able to breach the trend line and demonstrate momentum as it moves away from the trend line, every time the price comes to retest the trend line, you'll find that there is support there at that trend line. And sometimes what that looks like on a screen will usually be something like this, that the price comes, hits it, bounces, hits it, bounces, and it continues to do that, and usually that will give us several opportunities to get into some really well risk defined trades. So alright, the screen's looking a bit of a mess now, but I hope that my explanation was clear. In the next session we'll look at the charts, and I'm gonna show you some examples of these different scenarios playing out, and then in future sessions hopefully we'll start looking at these things live. I've been Will, thanks for watching, and hope to see you again soon.